evening, TheoTrade. This is Corey Rosenblum bringing you your Theo nightly video for October 11, 2018, after the fall. And we're talking first on sectors, our 9-sector grid, taking a look at which sectors survived the fall, which didn't, and which ones are in play. We'll finish up tonight's video specifically looking at the gravity spots for the S&P 500 and the ES futures. And we've hit one and closed there today. So stick around for the discussion on what the next move is, lower level in case this fails, or as would be expected, what level to play for if the market holds its gravity point here. We'll first start with our sector overview. And this is mainly looking at not just the market itself as the S&P, the Dow, or the Nasdaq, but within it. We look at 9 major sectors. And the easiest way I found to do that, quickest way at least, is to look at the sector spiders, starting with the 3 that we call the bullish or risk on sectors. We're probably most familiar with the financials, XLF, and technology, XLK, maybe even the discretionary or even retail sector, and that's XLY. We'll start there. And the way to get a comparison is to look at all of these together. So look at the charts as in terms of price at the upper right, midpoint, or the lower right, and compare where they are. For example, financials are at the lower side of its chart. Not just that, but within our ongoing sideways trading range. That's about 28.50, midpoint 27.50, and where we are now, which is just beneath that lower spot, 26.50. That is a potential spot to watch for a bounce in leading names and in the XLF itself. We're in danger, even more so than we are now, if 26 fails to hold as an XLF financial ETF support level. Again, take a look at individual components, Goldman Sachs, Morgan Stanley, and the like, Bank of America, for other opportunities in those names and positions and trades. XLK is technology, and we have continued to see our bearish rising wedge, and that is played with the expected or the logical downside swing from the lower trend line. That's taken us from 75 in the ETF toward and under 70. Our spot marker pivot to watch, 68.50. It is the prior high, a couple of prior lows, and it's now a pivot from which technology can bounce or stabilize, maybe back to 72.50. We had some decimation and some downside liquidation in our retail sector. This is XLY. It's broader than retail, but again, Don talked about Tiffany's and some other names that were hit really big to the downside this last few sessions. So the XLY, the broader ETF, is back toward its 105, 106 per share pivot. We'll be watching this level in the future. It had a little bit of a trading pattern, a little bit of a bearish rising wedge, but not as defined as our XLK. And our 3 midpoint sectors, we might not talk about them as much as the tech and the financials, but they are XLI industrials, XLB materials, XLE energy. Crude oil takes its little spot with a correlation in XLE energy. These are our mid sectors or mid-cycle, not really bearish, not really bullish sectors to look at. So XLI took a very strong 2 trend days in a row fall from the prior high at 80 per share. That's taken us back toward 72. Where's its spot marker pivot? 72 per share. Not quite there yet, but that rapid descent in the industrials, Caterpillar being one of them and others, that's going to be something to watch going forward. And you might not think this is the case, but XLB, which is materials, that is the weakest of our 9 sectors. It failed to hold support at 58, failed and broke beneath our rectangle, and is now the lowest on the grid at 54 per share. Now, we're not looking at absolute numbers. That doesn't matter to us. It's where these things are positioned relative to each other. So XLB is the weakest, and that is materials. We did have some success in crude oil on a rally breakout new highs, but XLE energy, the sector, just retested the high and has plunged from it the last 2 trading sessions. Now, the bottom 3 are things to watch when things go bad, and things did go bad from a bullish perspective, or good from a bearish perspective. So XLP is the sister sector to XLY, that's consumer discretionary. This is consumer staples, XLP, and it did not quite tumble as much. The main idea is if money is rotating out of risk on or offensive sectors, it probably stays defensive or relatively muted in our defensive sectors. That's what's happening. XLP is lower, did break, but not quite as much if you compare these 2 trend days in XLI, F, K, and the like. Staples, well, they held their own, and 52 per share is the pivot. XLV Healthcare, I had discussed in some other videos about the strength and this persistent uptrend, but it had a stellar rise, but now is on a stellar decline. The last thing to look at is utilities, XLU. Now, where is it on the chart? Up toward the upper right, a little bit above the midpoint. Notice that no other sector, XLK Technology, maybe XLY, those are bullish, are at the midpoints of their charts. XLV is up there, and XLU. We would declare the XLU, which is utilities, kind of like treasuries, to be the strongest from this perspective. And that again functions to an extent like a bond. We'll finish up as promised by talking about level spots markers and specifically gravity points on the S&P futures. These are levels from Don. He talks about these and we reference them as targets, spots for the market to trade toward and then to stabilize and then form a support bounce. That is what we're looking for the remainder of this week. But of course, we do not forecast, we plan. The market is down and the analog or the comparison to where we're seeing now is February. Note that the market fell, plunged, then stabilized, maybe at a lower level than we would have liked, but nonetheless did stabilize, bounce before it retested the low. That's the expectation. The question is, will it happen here at this exact spot, 2731, which is a gravity spot marker level pivot, 2731, and then stabilize up to 2800, maybe even the upper gravity spot at 2811. That is a spot that is a multiple inflection point. So we are watching for the rest of the week, 2731 in the S&P futures, for a possible reactionary bounce to about 2800 or 2811. However, as we know from our plans that just happened up here to us, if something should happen but does not, it often is a catalyst for a larger than expected move. If this is all we get at our 2731 spot, the next lower pivot to target will open up to 2682. So for the remainder of this trading week and in the next week, focus on these spots with respect to this fall from the high and the similarities that we're seeing from this fall in February. Take care, TheoTrade. This is Corey Rosenblum with your Theo Nightly video for October the 11th, 2018.